to talk to you about the basics of setting up your business. So maybe you are a freelancer, you're just starting out, or maybe you have a regular job, but you've got a side hustle and it's starting to add up. It's not just, $100 here and there. Maybe you're making a couple $1,000s a month. So I wanted to talk to you about some of the different ways we think about starting up a business. So there's really three stages that we think about moving through as you start to build your business. There's starting out, where you're just starting out, right? You've got revenue of less than $50,000 a year. You're doing occasional freelance gigs. You've got some sales. Maybe you're selling, maybe you've got an Etsy shop. You've got less than 10 transactions a month, right? Maybe you bought a laptop to start the business. Maybe you're paying for some website hosting, not a ton of expenses. You can track stuff on a spreadsheet, not a big deal. The second phase is growing phase, right? You've got between $50,000 and $100,000 of revenue. You've got regular freelancing gigs. You've got some sales, and you've got, less than 30 transactions a month, not crazy high volume quite yet. And then we've got our expanding phase, where you've got revenue of over $100,000. Maybe you're about to hire your first employee. You've got lots of sales. You've got tons of expenses each month. And now is really the time to get serious about retirement plan contributions. Now we're going to go through the specifics of each of these stages. But first, some must-haves, right? We have to have a separate bank account. Whether you're making $30 this year as a freelancer or $300,000, we have to separate it out. We'll talk about the different types on the next slide. We like to be very conservative. So we recommend that you save 40% of every bit of income you get into your business for taxes and retirement contributions. Every dollar that we make that we're able to save for retirement usually is going to lead to us paying less in taxes. So that's why we bundle those together. We love to have you save that 40% into a separate savings account throughout the year. We may have you make estimated tax payments. Those are due 4 times throughout the year quarterly. So if you are making, $50,000 to $100,000, we're probably going to want to have you pay into the IRS and the state that you live in. Must have a SEP IRA or a solo 401k. That's really the best way to defer taxes. Like I mentioned in the first one or the second bullet point, every dollar that we're able to shield from taxes goes into a investment account, grows tax-free, and then we're able to protect that money from taxes at this time. If you're doing your own bookkeeping, please do it monthly. You won't remember what that charge was last week, 9 months from now when you're going back. So please make some time, maybe an hour, just to sit down, whether you're using a solution like QuickBooks or you're just using a spreadsheet with your credit card statement. That's fine. Just do it contemporaneously and save your receipts, right? I don't need you to give us, your accountant, all your receipts. They just need to be saved because if there is an audit, though unlikely, the IRS will want to see all those receipts. So put them in an envelope somewhere, write on the receipt what happened. So if you go out for coffee with an agent or a prospective client, just write on the back of the receipt, met with agent. That's good enough for the IRS. Common wisdom suggests that you should spend around 5% of your business revenue on the finances of the business, right? We want our business to be healthy. Knowing the finances, having those optics into how your business is doing is going to help your business grow. So that's just a rule of thumb. So we don't want to be shy about spending money on the business. At Brooklyn FI, we spend a lot of money on the finances of the business to make sure it's running in a healthy way. So let's talk specifics, right? There's 3 different stages here, right? Our starting out, growing, and expanding. And then we've broken down kind of the recommendation for each category. So, revenue, if you're making more than $600, that income is probably going to show up on a 1099 form. Got to report it. So that's when we say that we're starting out. So if you're starting out, you don't need to go full on business bank account. We don't need to register the business. You're doing some freelance work. We do have to report it. And it's really important that we keep our business income and expenses separate from our personal life. So what we do is we recommend a separate checking account that's used exclusively, emphasis on exclusively, for income and expenses for that business. Some of you may ask, well, what if I have 2 different businesses? What if I'm a speaker and consultant and then I'm also a website designer? Can I combine them? It's actually a lot easier to keep them separate, right? Because you're going to have different expenses for each business. In the case of an audit, it's going to be hard to kind of argue why a expensive software or piece of hardware was necessary for your speaking engagement. So separate accounts for each business. We like Ally Bank. It's online, it's easy. They actually pay interest on the checking account. And remember, this doesn't have to be an official business account. This can be a personal account. It just is separate from the account that you're using regularly to, order Seamless and, whatever it is you spend money on. An EIN, an employer identification number, that is a social security number for your business. Not necessary when we're starting out. You can just use that personal account and you'll give your personal social security number to vendors who pay you. Tax filing requirements, you're probably going to file a Schedule C, which is just a form that gets attached to your tax return, your 1040. That's going to list out your revenue and your expenses. Pretty straightforward, not difficult to prepare. But really the issue with with the Schedule C is bookkeeping, right? If you're just starting out, you've got a few payments a year, maybe they're coming in through Venmo and PayPal, your friends giving you cash. Important to track that. We just recommend a G Sheet. In order to do your tax return, you are going to complete Brooklyn FI's expense organizer, which you can find on our website. So it's really important to have that organizer in mind. It's based on what goes on the tax return, right? We haven't created a new system. We've made an organizer that's easy for you so you know what's deductible, what is actually going to end up on the return. The entity type, what is your business? What is the structure? It's probably just going to be you, right? You're going to be a sole proprietor. If you do need some liability protection, if you're a driver of some kind, if you're doing events, probably good to set up an LLC, that's a limited liability company, to protect yourself. LLC has nothing to do with taxes. It's just legal protection from your personal assets and then the assets of the business. Retirement accounts, if you're making 50 grand, sure, we'll be setting up a SEP IRA for you. And we'll talk more about that in our meetings. All right, so our growing business, this is when things are getting going, right? You're making more than $50,000 a year. It's time to get a little more serious, right? You're going to need to get a business bank account. I am totally cool with you just using the debit card from that account. A business credit card can be nice, but it also does introduce some complexities into our bookkeeping, right? We have to put our expenses on the business credit card, then we got to pay it out of the account. Big fan of just using that debit card for all expenses. I know you want the points, but at the end of the day, making something simple and easier is going to be a lot more valuable than 50,000 Chase Rewards points, trust me. So in order to get that business bank account, we do need to go get an EIN, an employer identification number. And we have step-by-step instructions on our website, brooklynfi.com/EIN. Takes about 10 minutes. It's free. It's going to be a string of numbers, and you're going to take that to the bank to get your business bank account. You can't get a business bank account without that EIN. We like Chase in New York City. They're everywhere. They're very helpful in person. There's also some great online business banks. Mercury is a bank that we use here at Brooklyn FI. Very easy to set up. Highly recommended there. Like I said, EIN is essential. Bookkeeping. So now things are getting a little serious, right? We've got a bunch of income coming in, probably have more expenses. We're going to require that you get an online low-cost provider. Bench is one of those. It's going to cost you about $150 a month. And then again, at the end of the year, you're going to take all of that bookkeeping work, which is going to produce a profit and loss sheet, and you're going to translate that to Brooklyn FI's expense organizer for the tax return. And you're probably still just going to file that Schedule C. We're probably just going to list the income and the expenses, and then we'll pay taxes on that net income. The entity type, again, you're still probably just going to be a sole proprietor or a single member LLC. And then the type of retirement account, when we're talking about, $50,000 to $100,000 of revenue, we might want to graduate to a solo 401k. And that is a 401k that you can open for just you. If you have employees, you can't do it. It's only for business owners who are sole proprietors. Partnerships can work sometimes, S corps as well, but no employees for that solo 401k. The reason why we would do a solo and not a SEP is if this income is not required for cash flow. So if you are, let's say this is your side hustle and you're making, $100,000 via your speaking engagements, we could actually sock away probably, $30,000 to $40,000 of that income and not pay taxes on it into a solo. We have the opportunity to contribute almost $20,000 as an individual. But then we also get to contribute 25% of the net income from the business to that solo. So if you've got the free cash flow, we love a solo 401k for shielding all of your, or most of your business income from taxes. So if your business is kicking ass, you're expanding, you're making more than $100,000 to $10 million. After $10 million, you're probably off this spreadsheet and it's time to hire a CFO at that point. Definitely need a business bank account with a debit card. Probably time to get a business credit card at this level of revenue and likely expenses. Again, Chase or an online bank like Mercury is going to be great. EIN must have. And for bookkeeping, you must have a human bookkeeper. It's going to be too hard to manage this on your own. And we're talking about this level of revenue and expenses. Mistakes can be very costly. So we feel that it is essential that you have an accountant and a bookkeeping team on your team to help you work out the finances of the business. It's going to cost between $300 and $600 or maybe more a month, depending on this revenue number, but it is absolutely essential because mistakes get made. We correct them all the time. Having your books not done throughout the year and then coming in on, February 15th and saying, hey, I'm ready to do my return from last year. And there's 1,000 transactions to categorize. An accountant, Brooklyn FI or whatever accountant you go to, we're going to charge a premium for that. So we want to be doing regular bookkeeping throughout the year. That is absolutely essential. At this level of income, you might still just be a Schedule C, right? We have lots of businesses that we advise on that have millions of dollars of revenue, and it's just all showing up on a Schedule C as a sole proprietor. Most of the time, it probably makes sense to switch entities to an S corporation, which is just a small corporation. So you'd file an 1120S, that's the name of the tax form. Potentially you have a partner, so maybe you're filing a partnership return. Do keep in mind that S corps and partnerships have an earlier deadline. So most tax returns are due April 15th. In the case of business returns, those are due on March 15th. And then at this level of income, probably going to do the solo 401k, right? We're going to be able to shield potentially almost $57,000 of that income each year. If you have employees, remember, no solo, definitely not allowed, but we could set up a regular 401k plan that allows you, the business owner, as well as employees to contribute to retirement. So we talked about our EIN, super easy to set up. So I just wanted to give you kind of an example of how cash flow might work if you're just starting out. When we're growing and we're expanding, it's going to be a bit more complicated than this, but right out of the gate, maybe you just are dipping a toe into freelance. This is kind of a simple structure that we recommend, right? Customer pays you. They're going to pay you through PayPal. They're going to pay you by check. Maybe they're going to direct deposit. You need to have a separate account. Remember, this is not your regular personal checking account. This is a separate personal checking account used exclusively for business. So the income is going to flow in here. And then if you have bills or business expenses, it's going to flow out of here. You're just going to use that debit card. It's not going to be sexy. There's no business credit card. Just keep it simple. It's gonna provide a lot more clarity and ease when it comes time to prepare the tax return. What's deductible? We've got our the Brooklyn FI expense organizer to show you what is deductible. Your home office, maybe a portion of your home, if you're buying laptops or you have a website subscription. All of those things are going to be deductible for you. So what's really important is that we save 40% of every payment. How did I come up with the 40% number? Well, it's basic income tax plus extra self-employment tax plus potential retirement contributions. This is maybe a little aggressive, but I think it's essential to make sure that we have the cash somewhere, knowing that when taxes are due, we have the availability to pay it. What happens a lot with Brooklyn FI clients who we're meeting with for the first time, they come in the door and they say, it's my great freelancing year. I left my job last year and I made $130,000 this year. Isn't that awesome? And we say, yeah, it definitely is awesome. Do you have the cash saved to pay the tax bill? Most of the time we don't, right? We're humans. We're not great at saving. So if you're starting out now, let's get on the right foot. Let's save 40% of every paycheck that comes in or every payment to a separate personal savings account. It can also be at Ally. It could be anywhere you want. Not super picky about this. I like to name things, so let's call it taxes and retirement contributions. And then a lot of folks ask, like, well, how do I take money out of the business? We don't need to be super precious about taking money out of the business. If you need to, use this freelance income, this cash flow to pay your regular expenses, that's fine. Just take cash out. Remember that at the end of the year, when we do your tax return, we're just going to report the income and expenses. The actual money moving out of the account is not super important. This part of it is, right? We got to show the income coming in and the expenses going out. Anything that's coming out as a distribution is what we call it to the owner. Totally fine. Do that as you need. So that was a lot, but hopefully you have enough framework to make some good decisions about how to get your business started out on the right foot. Thanks for watching.